You don't need to trade every day to make a living. Ladies and gentlemen, fellow traders, hi, welcome to the live show on this fine Tuesday at 1100 GMT plus 2. Here we go. Another live show, another day. And it's Coffee with Rob. Right, so where are we? Now, risk. Don't forget the risk, guys. Most traders don't like risk. And if you don't like risk, don't trade. And most traders lose money. And if you don't like losing money, don't trade either. Not good for you. But yeah, how are we standing? How's things going on your side? Hopefully everyone's well. As I say, you don't need to trade every day to make money. Most traders watch and wait. But if you start watching for movement, and you start getting impatient and you start looking for that movement, it could give you a lot of losses. So be patient in the market, wait for the trades to come to you. That's what we're going to talk about today. We're going to go over that in detail today, and we're going to have a little bit of chat about that as well, because a lot of people are very impatient in the markets and they're always jumping in, and when they see things going slightly against them, they jump out and so on. So it's a good idea just to hold on, wait, and let the trades come to you. Hopefully the show goes okay today. Hopefully we don't have too many lags or anything, because I do know that in the last couple of days, YouTube has had a lot of problems. So I just want to see how this is going to go. If we have problems, we're just going to have to move on. But yeah, we have had a lot of issues with YouTube last night, yesterday. Well, for me it was last night. For some of you it's today, yesterday. But yeah, I'm hoping their servers are working and everything's okay. I don't know. It could be the undersea cable between us and the world. I don't know. But there was a lot of issues yesterday. Hi Shane, good to see you, and everyone else. I think it's starting to be okay, starting to work. Let's hope so. Let's hope it holds on and does what it needs to do today without too much issue. But I'll keep an eye on it, and if it goes down the pear shape, then we'll move on. So I don't know if you guys noticed, S&P 500 starting to fall. It's also trying to break through this level, so let's just keep an eye on that, see what it does. It does seem to be wanting to turn around and lose its strength there. The Euro Great British Pound trade is going very well. It's not on this platform, but it is up. But I see there is a little bit of a red candle there, but not much. It's been going up all along, so I'm not too concerned about that one. Today I was looking at United States dollar, South African rand for the long trade again, looking like it's broke to the upside going up, so that one looks okay. Brent crude oil, I know a lot of you have said to me, but Donald wants the oil price to go down, so he keeps on trying to force it down. But in the long run, over the 33 years that I've been trading, I've seen Brent crude oil, and when it's at this level, it normally heads on back up. So somewhere down the line, it'll feed you a little surprise and go the other way, which it always does. Then the other one is the ETH long. Definitely going to the long side now. Looks like it's bouncing up out of this level of money here, moving to the upside. So those of you who took that trade, but then you got to watch out for that level that I drew in there. I drew that trend resistance in. It might hit that resistance and come back. But if you want to wait and be cautious, you can wait for it to break through that before you buy, or you can buy it off the level it's on now. Then gold. Gold is still looking a bit bearish. It's been running a little bit downwards, and it's hitting that trend resistance every time and heading to the downside. No need to rush any trades. If you hold your trades, if you hold on, you wait for the trades to come to you, then things will work out. When you start rushing and you start becoming impatient, that's where the problems start to come in. Traders get bored and they become impatient, and they start looking for those faster trades, and this is where the problem comes in. Yeah, I find it very confusing, Shane, when I see charts that are so full of different indicators and so full of different lines and systems and whatnot, it becomes too confusing. I actually got that aha moment probably 10, 15 years ago when I had a lot of stuff in my charts as well. Had all the things on the bottom, the MACD, the RSI, the volume, all that. So that was taking up half the page. And then I had moving averages, and then I had lines all over the place. And eventually I said to myself, you know what, Rob, you can't see what's going on this chart, man. You're insane. And I started to take stuff off. And the more stuff I took off, the better I got, and I was like, oh, wait a minute, it actually gets easier the more stuff you take off, because there's nothing sort of taking away your focus. Not to mention, you can see the chart that much easier. If you take this and you look at it and go, oh, there's the S&P 500, you can just clearly see what's going on. You can see where the chart's going, what's happening, nothing's in the way and nothing's distracting you. So you've just got a couple of lines and you can basically see what's happening on the chart. Makes it a lot easier for you. It took me a long time to figure that out. I'll be straight with that. It took me a very long time to figure that out. I mean, I had so many lines on my charts. I had a mishmash of stuff going on there, because you add system after system after system after system, but you don't want to let go of the old system. You just add a new one all the time, and you end up with a whole bunch of things going on your charts. And it becomes insanely confusing to even see what's going on. And even now, I'll look at somebody else's chart and I'll be looking at it thinking, where's the buy? Where's the sell? What's going on here? Very, very complicated sometimes. So yeah, it's better to have clean charts. So I'm holding these two trades at the moment, the Brent crude oil and the United States dollar, on this platform, which is keeping us in drawdown. But I'm not too concerned about that. On my other platforms, I am sitting with S&P 500 long, which is a bit of a concern because it's starting to turn. I'm sitting with Euro Great British Pound long, Euro, United States dollar, Canadian dollar short, Ethereum long, and those two as well, obviously. And then there's one or two other trades as well, which too many to mention. But on this little platform that we use for the show, I've just got these two sitting in drawdown. I can't open all the platforms all the time. That's the problem. So I'll work on my main sort of accounts, my main platforms, while you guys are not around, and then I won't open these ones, and then they just lie around. They don't get many trades on them. But it's one of those things. At least we can use it for the charting, and I can show you what's up and what's down and what's going on. At least it helps for that sort of purpose. But yeah, impatience and looking for movement will cause you to lose in the long run. And impatience comes with what I've seen with traders. A lot of impatience comes from the inability to make money fast enough within a period of time. So what I see is a lot of traders need to make money month to month or week to week. And that's where your downfall comes in, because then when you're trading on a higher time frame with, let's say, a lesser amount of money, then you can't make enough to make a living, and you need to make that money by the end of the month. So that starts to become a problem for you. So the impatience starts to kick in. So you start to drop into those time frames and you start to look for a quick way to make money. Now, somebody asked me on the show, no, not on the show, somebody asked me in the comments the other day, but what if I've only got $5,000? Can I trade with that? I'm new to trading. Can I trade with that? And yes, you can, but you can't live on it, because let's say you're lucky enough to double your money within the 12 months. Let's say you can take that $5,000 and turn it into $10,000 because you're a pretty good trader. So, there you go. You double your money, which is quite good. Think about this. Think about where on earth can you double your money? Where? I mean, where can you take your money and double it in 12 months? There's not many places you can go and do that. But you can do it on the stock market if you're fortunate enough with leverage trading. Just remember, you can also turn it into zero. But if you are fortunate enough and you do manage to double it, then that $5,000, like I said to him in the comments, becomes $10,000. Now you've made $5,000. Now, I don't know too many people. I don't know where you live in the world, but I don't know too many people that can survive for a year, pay rent, buy food, and that sort of thing with $5,000. I don't see how that's going to be survivable. It's less than $500 a month. Now, I say to you, so you've got $5,000. Are you expecting to live on it? Or are you expecting to grow it and you have another form of income? Because if you have another source of income and you have $5,000, yes, then you can take that $5,000 and slowly over time growing it. That means even if you only turn it into $7,500 this year, next year you might turn it into $14,000. Who knows what you might do with it, but you can't live on it. You can grow it and turn it into something better and make it bigger over time. So the fallacy is that you can come in with $1,000 and you can start making thousands of dollars on it. So now what you're expecting is to bring in $5,000 and make $50,000 in a year. Now just think about what you're asking for. Just think about the percentage increase you're asking for on your money if you want to do that. Just think about what you're doing. Where on this planet can you take $5,000 and turn it into $50,000? It's just not realistic. And the only way you would be able to do that, while there are people out there claiming you can take $100, turn it into $1 million in 10 trades or whatever, 9 times out of 10, what happens with that challenge is by the 6th or 7th trade, if you get that lucky and you get that far, then you lose the big one. You lose it all. So very few people actually get to the end on that theoretical trade. So while it is a theoretical possibility, in all practicality, not many will be able to achieve that sort of gain. So, you know, that when you make these things up in your head, when you make up these ideas in your head of I'm gonna like turn $5,000 into $50,000 this year, just stop, sit down, and think about what you're doing. Think about what you're thinking of. Think about what that is. Because if you were to take that $5,000 and you were to invest it in any investment bank or in an account or in shares or whatever the case, and you made, let's say you got a really good return and you got a 20% return on it. I mean, what are you making? $1,000? Now you want to turn it into $50,000. I mean, you got to be insanely good or lucky to do that. You know, you really got to think about reality. And, you know, it's actually quite insane to see some guys out there saying, bring your $1,000, put it in the market, and just watch it grow into this insane amount of money. Now, just think about this, how theoretically possible it is. You take $1,000, you trade the full amount, you double it up, you trade the next second trade, full amount, you double it up, and so on. By the time you get to the 5th trade, you're going to have quite a large sum of money. I'm not going to quote figures because I can't remember the exact figures, but it is a large amount. And then the 6th trade, you have to trade the full amount. and that's normally where it goes pear-shaped. You know, somehow or another, you lose the whole thing. So very seldom have I seen, well, I actually haven't seen anyone actually achieve it. I haven't actually ever seen someone take that and turn it into the $1 million. I've actually never seen someone actually finish the project. Most people end up falling short. I must be honest, myself, I would probably get halfway and back out and take the money because it would be insanely good profit. I mean, if I could get halfway, I'd actually be perfectly happy. But then in saying that, you probably get halfway to halfway and then, you know, lose there. So, yeah, it's just that it only takes one loss to destroy that gamble. But, you know, if you take that and do it 10 times, you risk $10,000, maybe you can do it. It's you know, it's worth the gamble. But like I say, theoretically it's possible, but practically it never actually plays out. How's it, Blue Mango? Good to see you, man. Good to see you there. Glad you're here. So let's hope the stream does hold on today with with all the problems that YouTube's been having. Yesterday I saw there was a lot of complaints on the servers, and live streams not working out and going down and all that sort of thing. So it was quite insane. Let's have a look at the news quickly as well and see what we've got on the way for the news. And news is quite interesting. NVIDIA and this H20 AI chip with China, it's amazing how the turnaround on that. Bank of America analysts believe the area of mega cap dominance may be done. Stock futures mark time with big retail earnings on deck. So once again, it's retail earnings. If it's not one thing, it's another. You know, there's always something on the go. And don't forget, at the moment, you've got Trump was meeting with Putin the other day, and now he's pushing for a meeting with Zelensky and Putin. So that's back on the table again. This whole Ukraine story is back on the table again. Google just boosted its stake in a Bitcoin miner. So is that good for Google or bad for Google? I don't know. We'll see. Vanguard plans to launch its first active stock picking ETF. Wonderful. Yeah, there's a lot going on, eh? A lot going on. Do be careful of, especially when these politics around the geopolitics start coming about. Just keep an eye on that. That can keep your ear to the ground on those sorts of things, especially over the weekends. And then you've got India tariffs and the Russia and Ukraine talks. Lots going on. And retail earnings now come on deck as well. So retail earnings will come on deck and they'll start putting their earnings. It's earnings season again. Start putting their earnings out and it'll all be really interesting. Signs of a healthier path to new records emerge for stocks. Wall Street sees rotation into lagging sectors as early sign and even healthier market dynamic. Yeah, well, you know how people invest in the markets. It's actually quite interesting. I'll talk about that a little bit as well now. Is when people get into the markets, everybody's invested in the top 20 shares, say, or whatever the case. And as they become expensive in their minds, as they become well bought, people start to look at penny stocks or other stocks or other items to buy in the markets, and it becomes quite interesting. People start moving their money into what they believe will be, future profits or whatever the case, to make them some money. So I see the German DAX is starting to turn around and go up. That's a big green candle, guys. Big green candle. Looks like it's bouncing off the trend support and moving back to the upside. How far will it go? Well, let's see, because there's a very strong resistance here where it's been hitting in and bouncing out of and going down. But if it breaks through that, wow, that's going to be a biggie. So keep an eye on that one as well. And like I said at the beginning of the show, you don't need to trade every day. Be patient. Let the trades come to you. You don't have to force the trade. It's not important. I know I make that mistake on a regular basis where I think, oh, there's a trade. I'll take that quickly. And there's nothing wrong with that because it's decisive. But, if you're a little bit patient and you wait for the trades to come to you, you might do a little bit better out of it. Even though you lose that little bit between where you buy and where you take on. For example, this ETH trade here might be a good example of that. If I wait for this to break through that trend level, giving me a better trade, I'll lose all this profit down here, but it'll probably go up to 5,000. So it might be worth the wait because this could turn around here and break down to this 4,000 level. And the reason I say that is because I've looked at Bitcoin, which, crypto tends to follow crypto. So Bitcoin's got a big gap down to the support. And that gives me the feeling that there's always the possibility that that might fall down to its next support as well. You got to keep your eye on these things and be patient and let the trades come to you. And trade scalping the DAX already made the 1%. Well done. Good morning, David. Good to see you on board again, David. Fantastic to have you here. Lovely to have you here. That's always great. And then gold. Gold is feeling rather iffy. It's like not doing much, is it? Just sitting in this range, and now it's even narrowed and it's just hanging about here going down. So I don't think you're going to get much out of gold. But at the moment, we're not getting much out of Brent either, are we? I mean, I'm sitting with this trade and it's just going nowhere. It's just up and down, just bouncing around here. So yeah, we'll see. I'm in drawdown there. I'll just hold on to it and see what happens. Nothing much going on there. And then, of course, Euro Great British Pound is doing okay. It's actually, I'm long on this on the other side, and it's doing okay. I'm not too concerned about that one either. Yeah. So do you guys all still risk 1%, or have you changed your risk factors? Do you have a different risk factor to 1%? That's always interesting to me, what people risk on any individual account. Because a lot of people risk 2%. I prefer 1%, as you know, on the accounts. But because 1% just gives me a straight round figure. And if I happen to lose 10 trades, then I only lose 10%. But a lot of people go for the 2%. And now some people are even going for like huge sums, like 5%. Just remember, if you go for 10%, 10 trades, you've lost the whole account. But yeah, some people are going big on the percentage, but you've got to keep the risk the same on every trade. Just remember that, no matter what risk. But I think 1% is a fair amount on any account, because then you stay alive, you stay in the game. I think if you start going for the big amounts, like 5%, you won't be in the game for long. If you have a run of losses, it can be quite nasty. 1% there, Shane. Yeah. Gold will make me turn to alcohol. I think in general, Blue Mango, that is that's not gold, that's trading. Trading in general. Where's Brewman? I risk 2% on longer trades. Yeah, okay. It just depends, because a lot of people are impatient, and impatience plays a part with risk as well. So what you might find is you might risk more on the longer trades, but it's worth it, because there's a saying that if you wait and watch, and you wait and you watch, and you wait and you watch, and a trade comes up, and a good trade comes up, you can go in hard. I mean, you can go in really hard on a trade like that. So if you're trading higher amounts on higher time frames, if that's your plan, then yeah, there's nothing wrong with that, because if it's a good trade and you were patient and you waited for it, then you can get a good return on the longer term trades, and that actually works quite well. But on the shorter term, you said you actually sometimes risk more on the shorter term. There I would risk less, because it's short term trading. So I'm actually quite surprised you said you'd risk more on the shorter term trading. But yeah, that's up to you. But I would have thought that on a 5-minute chart you'd risk less, to have more trades, or be careful, or whatever the case. I mean, I myself might drop the risk quite insanely on a 5-minute chart, to say 0.5% or whatever, rather than trading higher amounts. And I would rather go up percentages on the higher time frames with a longer view to making the money. So yeah, but that's interesting. Gold is Shane's bread and butter. Yeah, but Shane, I've been having fun with this crypto thing. I know I didn't trade it here now, but I traded it on my other account, my main account, and it's made me some decent money. So I've been enjoying myself. You should have a look at it. It's actually great. I've actually been enjoying myself with this crypto. It actually moves, and it trades all weekend as well. Just keep an eye on it. It's actually a bit of fun. Unfortunately, I think I did trade it once on here. I'm not sure, but I've been using it on my other account, and it's been a lot of fun. That and the Bitcoin. If you have a look at it, there's a lot going on here. You've got this bouncing out of the money, going up. And at the moment, I'm sort of being patient and waiting to see if it breaks through that trend. But then you've got Bitcoin as well, and that's why I'm waiting, because Bitcoin's got all this gap down to this level at the bottom, which is a support. If it gets down there, it's a good buy. There's so many things going on with this that I'm actually quite interested in. And the only reason I'm really getting into this crypto is because it's sort of become that point now where it's just too big to fail, and I don't want to invest in it, but it's good fun for trading, and why not? ETH head and shoulders. Oh, I'll double check that now, Shane. My win rate is a bit better on shorter term trades, Rob, but you are right. I should. No, I'm just thinking along those lines. I'm thinking if it was me, I'd probably risk less on the shorter term frames and risk more on the bigger time frames, because the bigger time frames are a lot slower, and the shorter term time frames are a lot faster, and there's a lot less to movement to take. So, but yeah, if you're doing well, don't let me change anything for you. That would be a mistake. But I'm just saying, it is quite interesting. Shane, you are seeing a head and shoulders. You're starting to see the shapes in the market, the pictures in the market. Sometimes they can haunt you. And yes, I'm seeing what you're seeing. I am seeing what you're seeing, but I'm also seeing the head and shoulders kind of over there more than over here, because here you've got a double head. And yeah, I'm looking for a sort of plain, more of a plain head. But I'm seeing what you're seeing, pretty much. There's a shoulder, there's the head. Yeah, if that head and shoulders plays out, then it's going to go to about 3.7. Yeah, all the way down to here, 3.7, which is quite far. Interesting. If it did play out, I mean, that would be quite a hectic one. But if this price here breaks that shoulder, like it goes above that shoulder, then the head and shoulders is negated. And that would be if it goes above that trend support as well, or trend resistance as well. So anywhere above that level. So for example, I'm just going to draw this in just quickly. So if it goes above that line, then the head and shoulders is negated, and you'll see that it's also above the trend resistance. So patience here. If you wait for it to break above that, you're probably going to get a good line. But on the flip side, of course, if it goes downwards and breaks to the downside, you could get a pretty good short out of it as well, because then it's going to go pretty far. It's going to go all the way down here. So yeah, it's a good thing to keep an eye on and see what it does. But it's been fun, that one. It's been good. Protagonist 0, fastest, cheapest, chosen one. Well, yeah, I'll plug in next. Then I'll go. Protagonist, I'm not sure what you're talking about here, but yeah, we don't advertise anything on the chat, and if it's a plugin, please. How does BTC compare? Yeah, BTC looks bearish. You see, that's why I looked at it as, and that's why I haven't gone long on ETH as well. And I drew that trend in, is because BTH looks like this, and you can see it's coming down, and there's a big hole here where it could fall down to support. So there's a good chance this could carry on going down, and they tend to follow each other. So that's why I also said over here as well, be cautious, because if BTH goes down, this will probably follow. So there's a good chance it could come down to the next level, but then there's also a good chance it could come all the way down to these lower levels. And look where the support is on this. So if you take into consideration that distance is quite far. If it was to come all the way down, that's quite a heavy fall. So yeah, I am aware of that as well. And that's why, that trade is on hold. Okay, so markets follow BTC. Crypto, yeah, I think they do. I think they tend to follow BTC a lot, the crypto markets. And I was just check the other account and see if I stayed in that trade, because I was long on it, and I wanted to see. I must actually check the other account. I haven't looked at it this morning. And then S&P 500, you know, while this looks like it wants to kind of break through that level, once again, just like we were talking about crypto following crypto, indexes follow indexes, and the DAX is jumping. So, but it's not going to jump far. I think it's going to hit resistance again and probably come down. So you've got to be careful of that as well. You'll find all the other indexes are probably doing the same thing. So that's not going to do much either. On the Forex side, the Euro Great British Pound is giving us a nice long trade all the way up to there. So I think if it goes all the way, that'll be great. I don't know if it will. We'll see if it breaks past that high. And if it gives us anything from there all the way up to the top, that'll be great. Okay. Well, at least the stream is holding on and it isn't falling apart today because, you know, I believe YouTube had such a big problem with the streams yesterday falling apart, and it gave quite a headache. It gave quite a big headache, I must say. Sometimes I get the urge as well to drop down the time frames and start trading on 15 minutes and 5-minute trades. And then I just beat myself up and tell myself not to get involved in it. But I did it for a while. I did it for a long time. I was fortunate enough to come out the other side without going bald and still being alive and still having some dosh. But yeah, it's quite tricky. It's quite time consuming. But I must say, you know, when you get bored, you tend to get down those time frames and you start trading on them, and it keeps you busy, keeps you going, and gives you some adrenaline, gives you something to do. But these days, I'm not that bored. I've got lots of things that keep me busy. For example, making YouTube videos for you guys keeps me busy. I don't have to play games anymore. Yeah. Yeah, no, I dropped time frames quite big time at one stage. Was having a right old rave. Did okay. Did okay. But yeah, like I say, one of the big issues is you have to sit there watching it. You know, the big problem for me is it's great if you come in and you take a couple of wins, because then you can literally say, okay, I've made some dosh, I'm out of here, I'm done for today. And you walk away. And then I've still got my investments and I've still got my higher time frame trades and all the rest of it, you know. But the problem is when you come in and then you take a couple of losses and then you spend the whole day trying to get that back. That's where the issue comes in with short-term trading. Blue Mango. Yeah, stick to long. We need the videos. Yeah, no, totally. No, look, I'm done with that. I don't need to do that anymore. And I don't bother with it anymore. I've definitely sort of stopped messing around on those lower time frames because it sucks you in, and you get busy with you know, chasing trades and chasing the markets and watching the markets all day. It also sucks you into the news. It sucks you into the economic news. It sucks you into CPI and jobs figures and all these things that you don't really need to bother about. And you just start going square-eyed. And it's actually better if you don't do that. You know, you can live a much better lifestyle if you just take a few big trades and you have your investments and whatnot, and then you can actually live a much better lifestyle outside of trading, with your friends and family, doing your stuff, whatever, and whatever you want to do. And you're not worried about the charts. You're not worried about what's going to happen next, and you know, trying to take trades and stuff like that. So it actually does work. It actually makes a big difference. Yeah, Shane, in the beginning, when you first move into the higher time frames, you will find yourself constantly checking. That evil mobile phone is the worst because you can be anywhere and you'll be like checking quickly. And I still do that, Shane. Don't feel bad about that. Everyone does that. Your money's in there. What you gonna do? So, I'm out there, I'm doing something and you sneak a quick peek at the trades just to see how it's going. Everyone does that. I don't know anyone who wouldn't do that because, why not? You've got trades going, you want to see what's happening, particularly at certain times of the day. But you get used to it. It takes time. And in the beginning, you will be constantly trying to check and what have you, even on the longer time frames. What you've got to get your mind around is that you're going to take a trade based on the charts. And then once you've taken that trade, what you've got to get your mind around is that you've taken the trade. You've taken the trade. And you've set your stop loss, your risk. You've set what you want your take profit to be, and you've made a conscious decision to take that trade, and that's that. Now, you're either going to lose the 1% or you're going to make whatever you've targeted. And that's it. And if you're there, you can go and check it out. You can move stop losses around into cost and things like that. And if you're not there, you're either going to take a loss or you're going to make a win. Every trade you take, just get your mind around this on the higher time frames. Every trade you take is going to cost you that 1%. So like, let's say it's this account. On this account, the trade's going to cost you around $250. For every single trade, that's the cost of a trade. So you've got a business, you've got an invested amount of money in that business. Whatever that investment amount is, you've got an invested amount of money in that business. And in that amount, you know that you are going to pay $250 for every trade. And at the end of the week, have a look at what you've won and what you've lost. Has the market cost you money or has it made you money? And then you can decide next week how far you want to go and how much you want to pay. Maybe you want to say, look, I don't want to lose more than $1,000 in a week. So if I've lost $1,000, I'm going to stop trading for the week. Some people will do that. Others will look at it as, I'll just pay my $250 for every single trade. And if I lose 10 trades in a row, then I've lost 10% of my account. That's the way to look at it. But what you want to do is just, when you take a trade, make that conscious decision mentally. You've taken the trade, walk away from it, and the trade's taken. It's costing me that money, or it's going to make me money. Leave it behind. And then you will come in once in a while and check. And then if you want to move things around, you can. For example, you might find that at a certain amount of loss that you're not happy with the trade anymore and you want to dump it. And you might feel that if it goes below that red line, that the trade is invalid and you don't want to wait for it to get to stop loss. So you take it out at maybe $100 or something instead of $250. There's nothing wrong with getting out of trades early in a loss. There is something wrong with getting out of trades early in a profit, though. When you're in a profit, do try and hold them for as long as possible. Most of my trades that come out early in a profit is because of a trailing stop. That is because I put the trailing stop up and then it comes back and takes it out, which, it happens. It happens a lot. But that's fine. You accept that. That's a free trade or a trade that's made you a small profit. But you're looking for that big profit at the end of the day. So Brent crude oil, I'm looking for a $700 profit on a $270 loss. It's either going to cost me $270 or make me $700. And that's the way I look at that one. United States dollar, South African rand, similar story on this trade. It's either going to make me $350 or lose me $250. I'm holding those two as long as I possibly can. You take trades with that in mind. You're going to lose some, you're going to win some, and you just got to get your mentality around it. You don't have to watch it all the time. Now, when you're on 5-minute trading, you have to watch it all the time because it's such a small margin that you've got, and it's moving around quite a lot. So that can be quite tricky. Yeah, holding when in profit is one of the most difficult things to do. People think that taking a loss is one of the most difficult things to do. Most people think that taking a loss is one of the most difficult things to do. But do you know what? Taking a loss is easy. Because number one, you know you're losing. Number two, you know you want to protect your capital. So you're taking a loss. You understand you're taking a loss. When you take that hit, you just take the hit and you just accept that you've taken the hit. The difficult part is holding on for profit. That's the most difficult one, because suddenly you see you're in a profit and you're making money, and you so badly want to keep that money. You so badly want to take that profit. It's psychological. You see the green and you just want to take it. And the problem behind that is you're going to take it at $50 instead of $300 or $700, and then it's going to keep on going and making more. And that's even more painful than actually losing money, because you took $50 and it goes on to make another $500. That's literally more painful than losing money. You won't believe it, but that is a fact, which is why I've told you guys, do yourself a favor. Use the stop loss to your advantage. In other words, when it goes into profit and you think, I want to take that profit, don't take it. Just take your stop loss. Move it up behind it. Give it some room. Move it up behind it. And say to yourself, well, if it takes out my stop loss, then I was going to trade out of it anyway, and I would have taken that money and I would have been perfectly happy with my $50. But now I put my stop loss at the $50. And if it comes back and takes that out, then I get the $50. If it doesn't, and it keeps on going the way it's supposed to, then I'm going to make the profit. Look at it that way. Use the stop loss to your advantage. Use the trailing stop to your advantage. Trail it up. Trail it up. Don't get out of the trade. Trail the stop loss up behind it. And then don't get upset when it takes out your stop loss and then carries on going up. You were going to get out anyway. And if it takes out your trailing stop, then you think to yourself, well, I was going to take the profit early anyway, and because I was so desperate to take that profit, and now the trailing stop did it for me. That's okay, But if it goes north and it keeps on making you money, you're going to be chuffed. You're going to be like, oh, it made me another $500. Now I'm happy. That's it. That's kind of just how it is, and the best way to go about it. Knowing when to let it run and when to take profit remains one of the most difficult things. But that's why I say nobody can predict the market. Charts can't predict the market. Human beings can't predict the market. All we can do is take a high probability. And if you look at a trade and you say, it's running, is it going to run? Is it not going to run? Should I take profit? Should I not take profit? Now, I look at this Euro Great British Pound. Now, I am long on this trade. On another account, on my main account, right? So I've taken this long trade round about this level where you see that level there. And the reason I put it on this chart is when I'm looking at this chart, I can see what's happening, okay? And I would say to myself, at this point, Rob, you should maybe take the profit here, because look at that. It's hit a level and it could come down. But that said, just go back and look at all these levels where it's gone all the way up. Look what happens, okay? It goes up, it goes down, it goes up, it goes down, it goes up, then it comes down. Goes up, comes down, goes up. It doesn't go up in a straight line. So it's going up, it's going sideways, it might go up. It might come down. It's a 50-50. So how do I cover this trade? How do I cover myself here and say, well, I don't really want to lose any money here because I'm in profit? So what I'll do on that account is I'll take my stop loss and I'll move it up here to cost. Move it up to cost if I want to, if it's close, if it's far enough away. And then at least I know if it comes back, I don't lose my money. In that case, I think it's $1,000. So I don't lose $1,000. I actually rather take the profit and I lose nothing on that account. So you've got to look at your trade in perspective, and Will it run? Won't it run? I don't know. I don't know if it's going to run. Nobody can tell me if this is going to run. Absolutely no one. Some will say it's going to turn around and come back. Some will say it's going to run. There's a good chance it'll run because it normally runs. So there's a good chance it'll go all the way to the top here. There's also a good chance it'll drop off. It's 50-50. So I've got to run with the trade. I'm looking for a rather large profit. So at the end of the day, my only solution is to take my stop loss down there, take it to zero. The trade's costing me nothing, and maybe it can make me some money. That's the way to look at, the best way to look at that trade, to work with that trade. As I say, charts can't predict the future. I can't predict the future. But my strategy can make me money because it's going to make me bigger money in the long run than I am going to lose. So on that particular account, I normally risk $1,000. So that could lose me $1,000, but it's going to make me a few thousand. So in that picture, I can take the risk away completely and just make it zero. It's got nothing to do with the charts. You know what I do with the charts? The charts are there so that I can manage my risk. The charts are there so that I can take a high probability trade. That's all they're there for. The strategy is what's going to make you the money at the end of the day. I'm sorry I don't have that trade on here for you guys. But yeah, it is a good example there, because these two that I'm sitting with on this account are bad examples. Obviously, they're in drawdown. So that's not really going to help much to talk about this. But, when it's in a profit, then I'll obviously move it up. When it's in a drawdown, my hands are tied. It's losing. So you walk away and you just wait. Okay, that's it. I've got my $250 risk on here. This is 25 grand account, $250 risk. That's it. And you leave it and wait. Patience is a big thing. If you're not patient and you can't wait for the trades to come to you, if you can't wait for the trades to work out, then you're not going to make money. Like if you expecting trades to instantly give you gratification, that's going to be difficult. Then you are probably going to have to trade on the 5-minute charts, and then the gratification can go both ways. You can double your money or you can make it zero. Either way, it's going to do something, isn't it? Kaizen Pro Traders. Yeah, great stuff, man. Kaizen means small improvements. I take it that's what your name means. It's quite interesting. I don't know if you guys know that. It's a Japanese trait, and Kaizen means small improvements as you go. It's very, very interesting. You don't cut your losses. I will cut my losses, Shane. I will cut my losses when I'm of the opinion that it's done. So, for example, I got Brent crude oil in, and I've got a vision for Brent crude oil that I'm going to hold on to it, and it's going to make me that money and so on. But I might change my mind if it drops below that support and it just looks invalid and it looks like it's going to carry on going down. I might change my mind and cut my loss. So let me get out for $100 loss and just walk away. I will do that. But those kind of decisions I kind of make on the fly. I've made my plan. My plan is that 270 loss with a 700 profit. That's my main plan. But I might change the plan along the way. I might look at the trade and say, it's just not looking good at the moment. It's looking like it's turning against me. It looks like it's going bad. And then I'll cut my loss. Yes, totally, Shane. I will cut a loss when it's due, when it needs to be cut. But I won't cut a loss just for the sake of cutting a loss because it looks like I'm losing. I'm not going to do that. That's still a valid trade. If I look at like this one now, for example, yes, it's a little bit down. Okay, it's a little bit down on me, but it's still a valid trade. It's still above the support. There's still a chance it could bounce and go up. It's still broken above the trend resistance in its own way. And I can even take this out here and put it there, and it's kind of above. And actually, even better, it's coming back to retest it, and it might continue on up. So at the moment, that's still a pretty valid trade. sort of starts to become invalid when it gets down low down here, and it starts to look a little bit iffy. But as it stands at the moment, it looks okay. I'm not going to panic. So I will cut my losses when I see, oh, no, this is done. Yeah. Okay. Discretionary, as you put it. Yeah, it's very much on the fly. I'll look at it and say, it's time. I'm done with this. I've done that many a time. You got to get a feeling for trading as well. It's not all just facts and figures. And this is where we go wrong a lot of the time, is we think it's all facts and figures. We look at this chart and the fact is it's done that, and the fact is it's there. But sometimes you just got to have a feeling. You just got to say, yeah, I think it's going to do that because I've seen it all before and I'll probably see it again. Your mind kind of remembers these things and it pieces them all together. It's like when you get a feeling for a person when you're talking to them or something, and you get a feeling for what's going to happen next. It's not because you got intuition or because you got some magic. It's because your brain's seen it all before, and it takes all those calculations and it puts it together magically, and you figure it out for yourself. And then you sense danger, or you sense good, or you sense what might happen next. It's very much your brain piecing it all together and putting it all together. And that's kind of what happens with trading. It looks at something and it puts all the pieces together far quicker than any of your algorithms could actually. And that first thought that you get is probably the right one. 9 times out of 10, it's probably the right one. Shane, don't worry about your typos. At least I don't have to type. You see, I can sit here talking, and if I make spelling mistakes, you can only hear them. But you have to type it out, and that can be quite daunting, I know. I'd make typos all day long. Do you know what I hate, though, is on the mobile phone, when you're typing, and then it does the spell correct, and it doesn't recognize what you're typing, and you don't see it, and you send it out, and it's like, what the hell? It's some strange word. Yeah, no, I don't know where they come with some of those words. Or you have to type it in 3 or 4 times because it just won't type what you want to type in, because it can't pick it up. Yeah, no, it's crazy. The spell check on the phones. Yeah, I know you can switch it off, but then it'll just get worse. Because then it'll be my spelling mistakes, which are even worse. But yeah, you might write somebody's name in or something, and then it just changes it to something completely different. Hopefully not insulting, which is the worst. That is totally the worst. Yeah. Bit of a quiet show this morning. There's a lot of guys that are not around at the moment, but a lot of people don't stick around in trading. You'd be surprised how many people will maybe start trading and they'll trade for a few months and then they'll just disappear off the charts because it didn't work. You see, that's the thing, is you get involved because everyone told you it's going to be so great. And somebody said to me the other day, it's like you're trying to tell us that it's bad. And I'm not trying to tell you that it's bad. I'm just trying to give you an insight as to it's not perfect. You know what I mean? A lot of people get involved and they find 6 months down the line that it's just, they're not making money. And then they dump it. It's very important, if you're going to choose to do something, to persist with it and to make it work. A stupid thing is like this YouTube channel that I put together to put a few videos together to show people what happens in the market in all reality, rather than all this Lamborghini rubbish. And I did that, and then I decided, you know what, I'm going to see if I can make this channel actually do something and work. And, I didn't let it go and I didn't give up on it. I just kept on going with it, and it's actually doing nicely. So, I look at that and I think, just persist with things. Just don't give up on things. So many businesses that I opened in my life in the past as well, besides, because trading I persisted with for 33 years. I'm insane. But businesses and shops and things like that, they never took off in the first day. Some of them took a year, 2 years to develop. you got to have a lot of patience with a lot of things that you do in life. Don't just expect instant gratification. I mean, it's not like that. That's where the big problem comes in with trading as well. A lot of traders will get involved in trading and expect it to work almost immediately. And when it doesn't, it's a bit of a shock to the system because nobody tells them it might not work immediately. It might take a while for you to get your head around it. I don't want to talk about my sporting weekend, Blue Mango. It's rather insane. I actually did watch that rugby match between Australia and South Africa. They were 22-5 up at halftime, South Africa, and they lost that match 38-22 or so. I don't want to talk about sport this weekend, and then they got beaten up in the boxing as well, or UFC or whatever you call it. So yeah, no, interesting weekend. Shane, you get all the ads, dude. You get all the ads, and there's not a lot of people on the show today, so they've got to give you even more ads today because who are they going to give them to? There's no one to give the ads to, so they're like, I'll just give them to Shane, man. No, I don't know why you're getting all the ads. Sorry, dude. I really don't. Nick, how diversified are you? How many futures markets? I'm very, very, very diversified, Nick, in the sense of many things, okay? In the sense that I have investments, investment accounts, which are completely separate to my trading. And then I've got trading accounts, which are cash and only cash. And I've got trading accounts that only deal with shares and trading accounts that only deal with indexes and Forex and whatnot. And then I've got these funded accounts for a little bit of you guys and YouTube and stuff like that. So, we've got these funded accounts running now. So as far as diversification goes, I'll trade anything, even if it's lemon peel. So if there's something to trade, I'll trade it. Yes, I have a lot of different things on the go as far as trading goes. And do you know why? Because we get bored and we do stupid things, and we also have a lot of different things on the go at the same time. But one of the main reasons that I have different accounts, particularly on the cash accounts here, all right, it doesn't matter about funded accounts, things like that. If funded accounts are just what they are. If you guys want one, there are links in the description. It's a good in between your learning, your demo, and then you have a funded account, and then you can have a cash account once you've learned how to trade properly with responsibility. But the main reason I have more than one, say, cash account on the go at any one time is because I'd rather split them up. I don't like to put all my money in one bank. I've just got this thing that if you put all your eggs in one basket and you drop the basket, you got no eggs. So I split it up as much as possible. So there are points of I want to trade with X amount of money, so I'm going to split it 5 ways, and that's it. And then I'll do that. The difficulty of that, though, is, and what you'll find as well, is if you want to trade, let's say you find a good trade, United States dollar, South African rand, you've got to be careful not to trade it on all the accounts at the same time, because then you're not really diversifying it. You're kind of like just trading it all on all the accounts at the same time. It's not the worst thing, but by the same token, you want to try and diversify the trading a bit and trade different things on the different accounts where you can. There's nothing wrong with overlapping here and there, because the main reason you got the different accounts is just in case that broker tries to run off with your money, then they can only run off with a percentage of it, not all of it. But by the same token, you also don't want to draw yourself down on all your accounts at the same time. You've got to look at your risk factors and that sort of thing. But that's my main reason for diversifying. My main reason for diversifying is I have this this thing in my brain. It's my OCD. It's my problem. And it might not be somebody else's. Somebody else might be perfectly comfortable with putting all their money in one basket and they're happy with that. I'm just not that guy. I prefer to split things up. I prefer for people not to know what I'm worth as well. Any one person in a bank or anything like that, because that can be quite dangerous as well. And they see you, and they start targeting you or whatever the case. So I really, really diversify everything to keep life a lot simpler. Well, more complicated, but simpler as well, because nobody can really pinpoint you. Nobody can really tell, and everything's safe. If one bank decides to fly by night, you're still okay. If one broker decides to fly by night, you're still okay. So that's why. Okay. Nick, I'll trade anything. If it's available, I'll trade anything. Do you know that you can trade orange juice with IG, for example? Yeah, I'll trade it, but it must also be liquid. In other words, that doesn't mean it must be liquid like it's orange juice. I mean, it must be liquid in money. Cheers. I'm laughing at my own joke. Sorry, guys. But yeah, what I mean by that is if you're trading a large amount of shares, it must be instantly tradable. It mustn't be one of these things that, I've tried a few things. Like, I don't like trading palladium because it's so slow. It's so illiquid. I'd rather, gold is moving. Like, for example, here's gold, right? Gold, there, it's moving around. It's going up and down. And if I move this down to an hour chart, it'll move much more. And you can see it's flicking about here with numbers and things like that, even though it's dead today. But it's moving. Whereas something like palladium or sugar just doesn't go anywhere. It doesn't move. It just stays in the same place forever. I'll trade it, but very carefully, and it's not my favorites, let's say, because it's got no movement, it's got no liquidity. Liquidity is really important, to trade a product that's got to have liquidity, which is why I'm actually warming to these crypto things as well, because there's a lot of liquidity here. There's a lot of money in it. There's a lot of movement, and you'll get that movement in the share or in the product that you're trading. Whereas a lot of items, I mean, copper doesn't really move that fast. It moves, but not in the sense that it's hugely liquid or whatever the case. So it's not my thing, right? I've done it once or twice. I've played around with it a few times. Well, not once, many times. And like I say, it's got to have decent liquidity, and also swaps and things like that. That what you're paying for these trades and whatnot. You've got to be careful, because you must remember the buy and sell price can be pretty far apart when there's no liquidity, and that can be a hassle as well. On a funded account, you're not going to see it, but on a cash account, look at your cash account and go and look at, say, one of these things like copper or palladium or something like that, or sugar or whatever the case, and you're going to see that your buy price and your sell price is pretty far apart. And that's expensive. That's expensive, because you're not buying it in the middle. You're paying for it here. And if you have to sell it immediately, you're going to lose 10 points. That is the problem with these products as well. So they're expensive. Effectively, they're expensive. So that's why I'm not a big fan of those. I've been going on a long time about that, Nick? But yeah, my opinion is stick to the big ones, stick to the ones that have got liquidity, stick to the ones that have got money. There's plenty of them. Look how many Forex pairs there are. Look how many indexes there are. Look how many crypto pairs there are. And commodities, there's loads of good commodities that you can trade that have got liquidity, that have got movement. So, you don't need to trade orange juice if you don't want to. Markets that can move limit up and down for 3 days in a row bother me. Yeah, exactly. But that's the problem, and that's why I say I'm not adverse to trading anything if it's a good deal, if it looks great. If I go to, I haven't looked at the sugar price for a million years, but if I looked at it and I saw, gee whiz, this thing is a great buy. This is an amazing buy. This thing is so at the bottom. It's crossed. It's counter trending. It's definitely going to move up, and it's going to make me this much money. Then yeah, I'll buy it, you know, and I'll wait. I'll be patient, but not on a general daily thing. No, I'm not even going to watch it. You know, if somebody says to me, Rob, go check sugar, it's on the move, then I'll go and have a look at it and see. You know, and that's where I've dabbled in these things a few times. But when it comes down to daily trading, I don't bother with those. Just out of interest, guys. So yeah, you know, so that you know, yeah, yeah. German DAX, yeah. I wonder where the S&P is going to go later. If it is going to go up, or if it's going to actually break to the downside, it might just be a retest here, and it might actually start going up again. I'm still calling 6,600 for the S&P, and I am still long on this on the other account. So I'll keep an eye on it. If it breaks through there, then I'll have a look at my, as Shane says, cutting their losses. But I'm not in a loss. I'm actually in a big profit there, so I think I'll just hold on to it for now. That one I won't worry about too much. But you see that? That's another thing is how many things you trade. You see, like the S&P 500. Why would you trade S&P 500, NASDAQ, and Dow Jones, all three together, and maybe the Russell as well? You know, they're all doing the same thing, and they're all moving along the same road. So what I normally do with American trades, take three of them out, and I only trade the S&P 500 because they're all baked into the S&P 500 anyway. So I'll just like dump it and trade the S&P 500. Oil, you can choose WTI, Brent. I'd rather choose just trade Brent. What's the point of trading both? They're moving in the same direction. So don't get caught up in that as well. Sometimes you find these products that are exactly the same and they're just moving along the same lines. Don't do that. You got to watch that with crypto as well. Issue there. Markets can gamma exposure is positive, which is bullish. My average holding time on a trade, and I think you guys may have heard me say this before, but how long is a string, Blue Mango? How long is a string? You know, I don't have a specific answer for you, but I would say that in general, on a good day, most trades will be held for 3 to 4 days. Okay, sometimes more than a week. But a leverage trade will never be held for like 6 months or things like that. No, that's not going to happen. But yeah, I have been known, like these two now will be held for an extensive amount of time, which is unusual. So now that messes around with my overall average, for example. Because now if I suddenly hold Brent crude oil for a month, then suddenly my average hold becomes a couple of weeks, which is unusual. So it's difficult to work out. But for me to just off the top of my head say most of my trades will be 3 or 4 days, if that helps. Okay. But it's not going to be a true average because, like I say, I get the odd trade that I'm going to hold a lot longer. And I get the odd trade, you know, if I get into a trade and it makes me my profit in 10 minutes, you know, how do you average that out amongst all your trades? You know, because sometimes that happens. You get into a trade and within 10 minutes it makes you all your profit. Great. It's amazing, isn't it? You know, like it spikes and it gives you the profit. That's just one of those bonus trades. Now you can't really work that in. So I'll just take the ones in the middle, not the ones on the outer edges, the ones in the middle. The average in the middle would be 3 to 4 days. Okay. So the normal. But if you were to take all my trades and then start averaging them out, you're going to say, oh, Rob, that doesn't work out. It's going to be tricky because there's always the few on the outer edges on either side, which kind of like go long or go short. Yeah. It's a tricky one to answer. but I'll hold the trade for as long as it needs to be held. Let me put it that way. I'm not going to trade out of it because I'm now going through a few days, or I'm just holding it too long, or whatever the case. But I do have to be careful on that front as well, because sometimes a trade becomes expensive because you're holding it, because you pay for the trade every day. But there are trades that I'll hold for months. For example, a VIX trade. If I was to find a VIX that I can buy, then I'll buy it and I'll hold it, and it can take months for it to play out. And I'll pay those fees for those months, because when it plays out, they sometimes I'll invest a couple of grand in a VIX and I'll make 50 grand on one spike. So that sort of thing you've got to keep in mind. So you can't include that in your normal trading. You can't include that on the normal day-to-day stuff, because obviously that's a different scenario, a different picture, and you want to keep the picture in the narrow side. David, I trade all the pairs. Don't worry, I trade all the pairs. I'm just using these as examples here on this platform quite often. Sorry, I'm just using these as examples. It's like gold's always here, the DAX is always here, the S&P 500, Brent. Sometimes I change them around a bit and whatnot. It's just, don't worry, I trade all the pairs. Don't worry. New Zealand dollar, US dollar, Aussie dollar, US dollar, CAD, New Zealand dollar, Japanese yen, US dollar, Japanese yen. I trade them all. But on this, it's just this is for you guys. Okay. I do trade all the others as well. And then the list that I give you guys for like trade of the day and whatnot, the members get a trade of the day every day. Now, that's just my opinion and stuff that I watch and what have you. And obviously the video is more descriptive as to what's going on in the market and what have you. But that list is very much a sort of general list of trades that I look at and keep an eye on, and changes from time to time and moves around as well. But no, I'll watch just about everything. But you must remember, it's very difficult to watch everything, and human nature is to kind of zone in on things for a while. So, for example, you might trade the DAX extensively for a while because it's there all the time and it's doing something for you and whatnot. I mean, the FTSE was one of my favorites, and I haven't traded it for a long time. You can't watch everything at the same time. It's really difficult. So just go with the flow. If there's something to trade, trade it. If there's not something to trade, then don't worry about it. But I'm not a fan of only trading one or two products. You've got to trade everything, because if there's nothing to trade, look for something to trade. There will be something. There's plenty to trade. So I'm not a fan of just sticking to one product and saying, no, I know this product well now, so I'll only trade that, and I know how it's going up and down, because then you're not really waiting for the market to come to you. You're forcing the market. And, you want to wait for the market to come to you. So I'm not a fan of saying I only trade the DAX. No, I don't do that. If the DAX is doing nothing, I'll go look for something else. It's kind of where I am. But if there is something to trade on that, then I'll trade it. That's obvious, because I like trading that. And yes, there are those products that I gravitate towards and get married to. I can't help it. Everybody does that. So, Brent crude oil, gold, the DAX, the S&P 500, the Euro, Great British Pound, United States dollar, South African Rand, etc., etc. I get married to those. But you'll find over time, one will fall away and another one will come in, and it moves around. And it just is how it is. It's psychological. It's one of those things. You get used to things, and then you just keep on going for it. And while there's movement there, you take it and you go for it. I mean, if gold starts to become like too slow and boring to me, I'll take it off and put something else on the watch list. That's pretty much how it is. Yeah, I saw the question. Does that mean you go through the prices every day? They just said, no, you've answered my last two questions. I kind of answered all the questions at once, didn't I? Yeah, there you go. No, that's pretty much it. Yeah, okay. Diversification is important. I wouldn't say it's the holy grail of trading, but it is important. Look, my main diversification is diversifying my own money, wealth, whatever, into different places. Okay, so that's not a holy grail of trading. That's the holy grail of keeping your capital. That's the holy grail of staying in the game. If you put it all in one basket, you're going to have a problem. And then diversifying your trading is pretty important. I believe that, if you diversify wide enough, then you've got the opportunity to make money on all corners and all places. If you're zoning in on one thing, that one thing is probably going to beat you at the end of the day. So diversification is, I wouldn't call it the holy grail, but it is very important. I think it's a good thing to do. What people get caught up in, what the big mistake is, what I find is people look at these charts and they say, I trade the DAX because I know the DAX. But do you really know the DAX? Because if I take this DAX here over a period of time, do you really know the DAX? Do you know what the DAX is all about? Because I've been trading the DAX for many years, okay? And here at this time, you would have known the DAX as extremely bullish. You would have known the DAX as only a buy. At this point, you would have known the DAX is only a sell. At this point, the DAX is in a range. So do you really know the DAX? No. The point is, and I'm going to refer to system here rather than strategy, okay? Because strategy is, the strategy works on absolutely anything. It doesn't matter what you're trading. The strategy is the strategy, and that's over there. And here's the charts, okay? So we look at the charts, and I say to you, okay, so now you trade only the DAX because you know how the DAX moves. But you don't, because it moves the same as everything else. It moves up and it moves down. It goes into ranges. It goes into trends. It breaks trends. It counter trades. It breaks out. So it does exactly what everything else does. What you've got to get your head around is you don't have to understand how any one product moves. What you have to understand is how the market moves in general and how the charts move in general. The charts are not going to predict the future. All they're going to do is give you some historical data that you can use in the future to help you trade and to manage your trade. That's all it's going to do for you. It's not going to do anything else. It's not going to make you money. Now, when you look at a chart, you got to look at it as, don't even worry whether it's the DAX, the S&P, the gold, whatever. You just got to look for the chart for what it is. And what it is at this case is it's a range. The DAX is in a range. And in that range, I've drawn myself a bit of a trend in. And there's a trend support, and I can see it's sitting on that support. Now I know what that trade is doing. I'm not going to base my trade on it's the DAX, it's going to do that. I'm basing my trade on what I see. What I see on the charts is it's in a range and it's trading within that range. And I want to trade within that range, and I want to make money within that range. In other words, sell at the top, buy at the bottom, whatever the case. Or if it breaks out, buy in the breakout. So you see, following one product is not going to make you the money. It's they're all the same. As soon as you understand that every single one is the same, you see, the whole point of a chart is human beings are behind the charts. There's no magic maths or algorithms here. There's human beings behind all these trades. Those human beings, 95% of them are big institutions and big money. The rest are Mickey Mouse like us. Okay, so that money is moving around in the markets. And what it's telling you is what happened in the past may happen again in the future, because human beings are creatures of habit, because those creatures of habit are big movements and big money in the market. So what we've got here, we've drawn ourselves a resistance. Every time the price hits that resistance, it comes back. Why do you think that is? Because there's a whole bunch of selling orders. There's a whole bunch of people in there that are trading. And at the bottom, Similar story. Every time it hits the bottom, it goes up, because every time it gets there, there's money, and it pushes it back up. It's creatures of habit. They did it before, so they'll do it again. That money's lying there. And you must remember, everybody sees that price go there, not just you. Everybody sees that price go there. And everybody goes, I'm getting in there, I'm selling it there, I'm buying it there, whatever the case. And that's what moves the markets. It's not that the chart's magic and it's just going to bounce off a line and do that. That's a whole bunch of money that's moving there, that's moving it for you. So once you get your head around that, then you start to understand better why you use charts. You use charts because you see what happened there and you expect it to happen again. Sometimes they'll surprise you. Some guy with, or some big institution with big money will push you through here and just buy the hell out of it and break out. And that's where the breakouts come from. You want to ride those breakouts as well, and you want to get along with those. They're not predicting the future. They're not predicting the future in any way, shape, or form. All they're doing is showing you what happened in the past. You're predicting the future by looking at it and saying, that's probably going to happen again. Or you might have a different feeling. You might think, well, you know what? They're going to push it through now. They're going to push it through and go for the big one. And then you're going to go with that. That's what trading's about, guys. It's not about charts telling you. Charts aren't magic. They can't hit a point and then just like, yeah, that's where you must buy and that's where you must sell. It doesn't work like that. It doesn't work like that at all. Risk management, yeah. The stock indices only trends well about 2 out of 5 days a week. That's an interesting statistic, but you see, like you look at, for example, the stock indices, and you look at this DAX, for example. This trended for a really long time on the 4-hour. Look at this; it trended all the way up here. That was a serious trend. Now it's moved into a range. You've just got to trade what you see on the market, what you see here, and just go with the flow. You know, it's and also, for example, today, what do you think the indexes are waiting for? We looked at the news earlier. The indexes are waiting for retail earnings. They're waiting for earnings season to say, this is what happened. We did well or we did bad or whatever the case. So that's another thing that you're watching out for today is, what do the retailers do? Were they successful or did they fail? Or are they going to have good results or are they going to have bad results? These are things that you're going to be watching out for. But then the indexes play into that big time if you're trading indexes. Some people only trade indexes. Some people only trade Forex. Some people only trade commodities and others only trade crypto. There are those that only trade shares. Shares are about the easiest to trade, but you get bigger price differences in your buy and sell swaps, that sort of thing. So you've got to watch out for the cost of trading shares, but they are easier to trade than, say, Forex or whatever. But then again, also slower. So if you're impatient, probably not the thing to go for. If you're an impatient person and you want to trade faster, you probably want to be trading either crypto or Forex rather than like shares or indexes, whatever the case, commodities. Commodities are probably some of the slowest ones. And just remember that commodities are very, very cyclical. What I mean by cyclical is they tend to go up and go down and go up and go down and go up. In other words, they tend to stay in a range forever. These are not growth shares, for example. They're not like an S&P will go from 0 to 7,000 in a long line over 100 years. It'll just keep on going straight up all the way, and there'll be a few dips and up, and it'll just keep on going. But commodities will sort of go sort of up and down like a wave. Very seldom going straight up, but they do tend to find their way up over time sometimes, depending on inflation. But generally, they're very cyclical. Even the mining companies that you buy, they tend to be very cyclical, up and down. They don't tend to go up in straight lines. So you'll find a company like Anglo American, for example, will one day be on 600 and the other day it'd be on 80. You know, it just depends what part of the cycle it's in. Gold mines are about the worst. So yeah, keep that in mind when you're trading and when you're diversifying, that the commodities on, you know, you don't buy it for investment. You don't buy commodities for investment. I got so many friends who want to buy gold and keep it on, I suppose they keep it on the bar, I don't know, whatever, buy Kruger Rands or whatever the case. I want to invest in gold. It's really expensive to buy gold that way because they charge you immense fees to go and buy real gold, by the way. And you're not going to pay the price that you get here. You know, you're going to pay more, and then when you sell it, you're going to get a lot less. But then there's the question of where do you keep it, and how do you keep it, and where do you put it, and who do you sell it to? So, I mean, if you want to buy gold, buy it here, but it's not a good investment because it doesn't go straight up. It doesn't go straight up. A lot of people buy it because they think the world's going to end, and then money is going to go down the hole, and then you're going to need gold to barter with or something. Really, that's, I don't know. that hasn't happened, and your gold isn't worth as much as the S&P. For example, if you'd bought gold and I'd bought the S&P at the same time, maybe 40 years ago, I'd be about 4,000 times better off than you. So, yeah, gold's not a great investment as far as that goes. Good for trading, though. Great for trading. Fantastic for trading. The guys that made money, only guys that made money off of gold are the guys that bought Bitcoin. Bitcoin gold. They did well. And I was one of those guys that said, don't buy it. So, yeah, I'm an idiot. Okay. Rob, I want to thank you for your help in my psychology with your hammering on business plan strategy, making sure that in your wins you take more and never keeping your stop losses amount constant. I've got you. Oh, thank you. Pleasure. I'm glad it's helping you. Gold is a commodity, absolutely. Also coming to profit zone when you have a decent profit. I'm seeing the effect in my trading. It's nice to hear from you. Thank you. That's good. I'm glad it's helping you. I'm really, really pleased. Thank you for mentioning it, and I appreciate it. That's good. Makes me want to carry on when I see people succeeding and doing well. If you're a day trader trading like 15-minute chart, you'll get chopped 2 days a week, breaking about, or even losing a little bit. Most money is made on the 2 days a week. I thought I should mention it. Yeah. So Nick, yeah, what Nick's referring to is very much short-term trading, for example. Yeah, indexes are not going to move up in a straight line, and you're going to get days where it's just waiting, and choppy days. Yeah, you know, that's why lower time frame trading is very difficult. It's not easy to trade on the lower time frames. People think it's easy. It's not. It really isn't. So what I used to prefer to do when I was trading on lower time frames is I would prefer to take a trade and look at which way it's going on the higher time frame. I'd say on the daily it's bullish, on the 4 hour it's bullish, on the 1 hour it's bullish, and then I'll go down to the 5 minute and I'll only take bullish trades because on the day and the 4 hour it's bullish. So I'd rather not go against the waves, I'd rather go with them. So I won't take any short trades on the 5 minute chart, I'll only take long trades on the 5 minute chart. So if I was looking at the day and checking what's happening, I'd say, oh yeah, that's bullish. In the 4 hour, let's see what's happening there. And I'd say, okay, that's bullish. You know, it's still above that. And then I'd probably go down to the 15 minute and say, well, I'll only take bullish trades here because it's bullish on the higher time frame. So what I would do here now is wait for it to come to me, wait for it to give me a bullish signal, and then I'd go for a long trade on the 15 minute because everything on the higher time frames is bullish. So even though this is bearish at the moment, I'm not going to take that trade. I'm going to wait for a bullish trade and take that, and that will send me in the right direction. That's how I used to trade on the lower time frames. Okay, so I don't know, you guys don't have to do that. I mean, I'm not an expert on the lower time frames anymore. I used to be, but that's what I did, and it worked for me. In other words, if the day and the 4 hour and that is long, don't trade short on the 5 minutes, trade long. Trade all long trades on that day. That way it's less choppy and it's actually easier to trade, and you get most of the trades right that way. And that's how I stayed in the game on the lower time frames. It's a trick that I used. Rather than just looking at the lower time frames and waiting for it to break prior highs and prior lows and do this and do that, all I did was look at which way the market's going, bring it down, and in all high probability, it'll carry on going that way. And on the lower time frames, you're going to pick up the trades going in that direction. So Shane, I don't know if that's what you do, but there's a little hint for you. At 10. Monday was not in the mood to trade. You see that's one of the things with the short-term trading. You get those days when you're not in the mood. Whereas when you sort of got higher time frames, you just got the trades, and it doesn't really matter. You're in the mood or not. It doesn't matter. If you don't want to look at the charts, you don't have to. You can just leave it running, and it'll do what it needs to do. So you'll be fine. That's one advantage of trading on the higher time frames, is you don't have to sit and watch it. You don't have to sit and worry about it. You don't have to sit and nurse it. It'll just do its own thing as it goes. Much better. Much better. Jane, invest in premium. I've had no ads. The premium, thanks for that explanation on the time frames. Absolutely, David. Perfect. I don't look, guys. I don't suggest anyone trades on the lower time frames. I just tell you that's what I would do if I was trading on the lower time frames. And I do know that for example, Shane does trade on the lower time frames. I think Nick does as well. So guys, there you go. You can trade on the lower time frames if you know what you're doing. If you've got the psychology to do it. And like I say, that's how I did it. So yeah, pleasure. I hope it helps you. Okay, so yes, I do believe on YouTube, if you're invested in premium, you don't get ads. And if you're an avid premium YouTube watcher and you watch YouTube a lot, then you should invest in premium because it takes away the ads. I sit and watch shows in the evening, and I've got my favorite YouTubers that I watch and everything as well. Oddly enough, not in trading. I like the car shows. I love cars and a lot of traveling shows and things like that. So those are my favorites, and vloggers and that sort of thing. So yeah, it's better if you don't get the ads all the time, obviously. Let's do it while on the live show. Get rid of the ads, buy the premium. Yeah, no, it's all good. It's a strange setup. One thing that was discussed the other day is why don't YouTube give like members of channels, for example, people get a membership on this channel, which supports the channel, which is a favor to the channel sort of thing. So it helps the channel in one way or another, and you get something back for it here and there. But why doesn't YouTube give you no ads on that channel, for example? That's something we discussed. That would be good. That would be good. Like you get like an ad-free channel if you're a member of that channel or something. I don't know that, but it was something that we thought about. It would be nice. Yeah. I usually turn on my algo bot and let it alert me to longs and shorts. So you got an algo bot. Yeah. Algo bot can help if it's set correctly and it does the right things. What's your algo telling us to trade today? Short or long on the S&P 500? Go on, give us a what do you call it? A prediction there. Yeah, no, absolutely. I'm certainly still long on the Euro Great British Pound. not on this account, but in general. And I'm holding on to it. Look at the long tail of buyers coming back in here. I'm quite chuffed with that. That's quite good. That's quite good. What do you about these two? They're like naughty boys in the corner. They're not giving me a good trade, man. They're holding this account in drawdown, unfortunately. Little monsters. You put them in the naughty corner, those two. Not behaving themselves. And Ethereum is actually going up now. Pretty Brewman's not here today, but it is actually going up now. But I think it might hit that trend resistance and then break down again. I just got that feeling. But if it breaks through, it'll go up. But I got a feeling it's going to hit this trend resistance and actually start falling back down again. Interesting. And I'm not a big crypto guy. In fact, fundamentals, don't read anything I tell you about crypto, because I don't even know the fundamentals when it comes to crypto. I'm not strong on the fundamentals of crypto, by the way. I just look at it from a technical, 100% technical point of view when it comes to crypto. So it's Bitcoin, Ethereum, whatever. If I look at it, trust me, it's just, I'm looking at technicals, nothing else. I don't know what's happening in the background. Whereas with indexes and Forex and commodities, I've got my ear to the ground on what's happening in the rest of the world. So just bear that in mind if I say anything about crypto, eh? If I tell you buy Ethereum, there's no fundamentals to that whatsoever. Yeah, no. My dad once taught me, don't listen to anyone who says trust me. But in this case, trust me, I don't know fundamentals on crypto. Yeah, sometimes you just got to say that. Okay. I don't let the algo bot trade on its own. I always like to double check and buy and sell before I enter. And you know, Nick, that's actually a very good point. You know, a lot of people get these algos and they just let them run. But an algo is a robot in the background. It's a mathematical equation that you have programmed, or a human being has programmed if you haven't programmed it yourself, and it's running a program for you in the background on a trade. So it's running along, and it's saying to you, let's buy and sell, let's buy and sell. And you've taught it when it hits that level to buy and when it hits that level to sell, and you've given it some criteria. But Nick makes a really good point. Keep an eye on it, because you're a human being. And sometimes you need to have your ear to the ground, or there might just be something else that you spot on the chart that's going to make a difference. And because that thing's just going to buy, basically, and say, well, you told me to buy, so I'm going to buy. It can't see anything around it. It can't see if Donald's standing up and throwing hand grenades at the neighbor. It can't see anything. All it can see is what it sees on the chart, nothing else. 100%, 110% technical, and only what you've programmed into it. If there's anything else you wanted to add in, it makes it very complicated. So, for example, you might have programmed this. If it comes down into that support level, then buy it on a closed green candle. So it would have bought that. But now I looked at it and thought, well, hang on, you know, Bitcoin's doing that. So there's a bit of a gap here. You know, so maybe I should be careful. And then I look at the ETH again. I say, well, I'll draw in a trend resistance here, and that'll make it more safe. If it hits that, it'll come down. If it breaks through, it'll go up. Your algo doesn't have that information. Your algo's only got the information that you've put in to say buy it on the support and go. So your algo, you've got to keep an eye on it. What's the point? You know, I'd rather just do my own trades and sort it out for myself. But what the algo does do for a lot of people is it takes out the emotion, it takes out the fear, it takes out the psychology, and that might be helpful to you. But because a lot of people struggle with the psychology, so it can be useful in that sense. You know, it can take away the psychology, but still, I'd rather do it myself. And even if you struggle with psychology, it's not a bad idea to do it yourself, because over time you learn to overcome the psychology, you learn to overcome the fear, you learn to find your balance, you know. So, you know, practice makes perfect, and you overcome, you know, if you do the things that you're scared to do, eventually they're not don't fear them anymore, and you just do them. Okay, so the same applies to trading. If you do the things that you're scared of, or you just your psychology is not good, with time you learn not to fear it, or you find your way around it, or you understand that you're going to take losses and the strategy is going to make you money, and then you get over it, and then you get over the fear. And once you get over that fear, then you can do it yourself, so you don't need the algorithm to do it for you. Just a thought, it's actually better to practice it yourself as well, not only for that factor, but also to stay in the game, to stay sharp. Let's say stay sharp with trading, not to lose the balance. Nick, I love that. If the trade's a loser, you can blame the algo instead of yourself. That damn algo! Look what it did to me. Took all my money. I love it. Yeah. Blame the algo, man. Algo. Oh, look at it. Look what it did. Yeah. Totally. Yeah. I once tried somebody's algo on Forex, very small amounts, and I put it and I let it run to see what would happen, and it actually lost. I was like, that's not a good one, is it? But it wasn't a big amount. I was just testing it out, and I was like, wow, it's not really good, is it? Yeah. No, I don't use any scanner type software. No. My mind is the scanner. It like scans. That's my scanner. That's it. There's no robots in there. No, I don't use robots at all. No. Or any scanning things or anything. No. It's all, there's my scanner that scans and looks for the stuff. Yeah. I trust my own intuition. It's not to say that I don't trust technology and AI in the future and all that, but I mean, I use it for things and whatnot, for other things, but I certainly won't use it in in that scenario. Add 12. That's 12 ads. What's insane, Shane, is you say you've had 12 ads. I'm pretty sure that they don't provide that ad revenue to the channel. 12 ads. That's a lot of ads, man. Oh, no, I don't know. Wonder where all that money goes. Oh, I know. Yeah, no, totally. But that's the way of the world, eh? They provide the platform. So, yeah, absolutely. Good for them. I'm all for it. Can't argue. If you think about what these guys do for you, YouTube and that sort of thing, they provide this platform for you to get anything you want on. Like for me, I like watching vlogging channels and stuff like that, like I said. And they don't charge you for it unless you want premium. They don't charge you for it. It's all there for you. You can go for it. You can use it. I mean, they really do a good service to everyone. I mean, unlike in South Africa, we've got a service called DSTV, which I subscribe to because I want to watch my sport. I like my sport. And it's the only place I can get my sport, which is Super Sport, which comes from Sky B, I think, from overseas. So they obviously have to pay a fee to that. But it costs a large sum of money, okay, for you to have this. Well, when I say a large sum of money, about 1,200 Rand a month or something like that. Okay, so now with that's like a premium subscription. I expect to get no adverts, but I get adverts. Lots and lots of adverts. And I think, why am I getting adverts when I'm paying an expensive premium subscription? Okay, they don't put the adverts in the game, but they put them before the game and at halftime and afterwards and all the rest of it. And on the movies, you know, or on the shows, they put them while you're watching the shows and that sort of thing. I find that hard to take. You know, that's unfair. You know, you're paying a huge premium subscription to a channel to watch, you know, stuff, and then they give you ads as well. So those of you from South Africa will understand what I'm telling you. You know, it's not on, eh? Aha. All right, so David's also getting ads. Okay, that's good. I believe the ads now on the live show, you can see me, but you can't hear me. And then there's an ad on the side or something like that. Tell me if I'm right, but I believe that's what it looks like now. If the algo backtest and live forward test also gives you confidence. Yeah, backtesting, a lot of people subscribe big time to backtesting, but I would say that backtesting or even forward testing on an algo is really, really important, because you're putting an algo out there and you want to see what it's going to do. So yeah, that is, you know, for an algo, it's insanely important. Backtesting for yourself, it's difficult, because what I've found is with backtesting, okay, for yourself, is you kind of know what the result is. And this is the difficulty when you try and backtest for yourself. So when you take it back and you start at a certain point and you start trading and playing around with it, okay, if you're doing it on 1 minute and 5 minute, probably different. But if you're doing it in general, like on a program like this, what I find is, because you know the result, you weight your trades to a certain direction, and backtesting is not the way to go. I prefer when I don't know what's going to happen next at all, and I'll try it out. So if you don't want to try it out on your cash account, try it out on your funded account, or try it out on a demo account and see what it does. Forward test it. Forward test the system. So if you see a system that you want to use, you think, let me try that out and see how it goes. But backtesting, that's in the past. That's something that's happened before, and unfortunately, you know what's going to happen in the future. I'm talking about if you're doing it yourself for live. So rather try and forward test it in some way or another with either a demo or a funded account or something like that, and work out if the system's going to work before you put real cash in on it, or whatever the case. I'm not a big fan of backtesting in a personal capacity, but in an algo capacity, most certainly you need to do that to see if that system is working or not. But in your personal capacity, you are going to have some bias, and you are going to kind of know what happened next, and it affects the whole thing. On a 5 minute, maybe not, maybe a little bit different, but like on the normal 4 hours and things like that, you're going to know. To try and rather forward test the system and see how that works. So before you start, carry on using the system that you're using. And if you want to change it to something else or try something else out, then try and demo it or something for a week on the side, and just see how that goes and see how it looks. And then you can incorporate it into your trading maybe a week or two down the line, and see, you know, okay, I forward tested it. It looks like it's going to do that. And then you know, because I always find that it's best if there's nothing in front here, then nobody can tell me what's going to happen next here, because nobody knows. Nobody knows what's going to happen next. But if I do that, even though I've done it rather quickly, every single one of you knows what's going to happen next. You know, when I forward test this, when I go back test this, everyone knows what's going to happen next. So what am I going to do? I'm going to buy. I'm going to buy because I know what's going to happen next. And then it goes down and then it goes up, but it doesn't matter. I'm not going to sell it out there because I know it's going to go to there. You know, it's just, it doesn't work for me. So I'm a big fan of forward testing it rather. You know, find something that you can test it on and run it on the side for a week and see how it looks and see what you come out with at the end of the day. Because, like, for example, if I bought that there and that went down and I didn't know what was going to happen next, I might have sold it on a stop loss and thought, oh, I need to get out of that, and then it would have gone up. Whereas because I know it's going up, I'm just going to buy it and leave it and wait for it to go up. It's a really difficult one to call. But on algos, I'm ranting on now. But on algos, you really do need to backtest algos. Those are important. Cent accounts are an idea for forward trading testing for testing cent accounts. Okay, Chris. Yeah, interesting. Yeah. Okay. I'm just saying, I'd rather forward test something than back test something, because back testing, like I say, you've got some kind of idea of what's happening next, and it's going to affect your psyche. Whereas if you're forward testing it, you're not going to know what's going to happen next, and that will give you the real scenario, and you'll know if that system that you've chosen to work with is going to work. You've already got a system. You've got a system that you're working with. So you're using that system. So all you're actually doing is either replacing it or adding to it. And, you don't need to do that today or immediately. You can take that, like you say, put it into something else, test it for a week or two on the side, and see what it does. And if it really works well and it's better than the system that you've got, you can say, well, you know what? That's better than what I've got. So I'm going to incorporate it into my system or replace it or whatever the case, and then work with that. Just remember, the charts don't predict the future. They don't make you money. Human beings can't predict what's going to happen next in the market. You're going to keep the strategy the same anyway. And the strategy is what we talk about all the time: how much you risk, managing your risk, making the profit, making more on your wins. There's your strategy. So what system you use is kind of irrelevant in a way. And so you just carry on using the system that you use. And then if you find one that you feel is a little bit better, forward test it, see how it is, and then change it or add it into your system. System's not going to make you money. Win rates are not going to make you money, as you know. And, whether you've got even if you have no system at all, if you've got nothing on your charts, and I've actually got someone in the comments who says he lets his dog bark and then he chooses which way he's going, north or south. And then he just uses our strategy to manage the trade. 50-50. So he chooses a buy or a sell based on how many times the dog barks or something like that, or on a coin flip or whatever the case. And he's doing quite well out of just managing it on the strategy. If you sit here and you take a trade on every single one of these blocks here, every single one, you take a trade 50-50. You take all the lines off and you just say, I'm going to buy that, sell that, buy that, sell that, buy that, sell that. Okay? And you just let the trades run with the strategy in place. You're going to come out at the end of the day in a profit. So don't worry about it. It's, we're always back testing systems and checking this system and checking that system. It's not going to make any difference at the end of the day. They're all the same. All the systems are the same. Do you know that every single system in the market works because some genius has actually backtested it and made it and made it work and all the rest of it? And they all work. Every single one actually works, except this new ORB strategy, opening range, whatever strategy. That doesn't work. Opening range breakout strategy, yeah. I was actually doing a video on that. That one doesn't work. I did a forward test on it. It doesn't work. It's rubbish. There's a few guys out there saying that it works. It doesn't. It truly doesn't work. Okay. Buy short to 64.20. 64.20. Let's see. 64.20. Shane, if SPY goes short, if S&P goes short, if this drops, okay, it's going to go way past 64.20, dude. If this goes below this line and gives us a red, it's coming all the way down to 63.80. Why 63.80? Let me show you so you can see the picture. There's the money. Okay. The money's there. All the way down here at 63.80. So if this breaks to the downside, she's coming all the way back to here. Not going to stop here. It's definitely not going to stop at 64.20, that's for sure. It's going to go flying through 64.20. So maybe on the 5-minute charts or something like that, you're seeing that. But if it breaks down, you got big run down to 63.80. Okay. So that would be quite a move. And then will it hold? Will that money hold is a big question. Or will it fall all the way down, which is quite serious. Just started watching your channel, Rob, and started moving forward. Cheers, mate. Oh, good to have you on board. Good to have you on board. It's always good to have some new viewers with us and some new people on board. It's really, really great. And it's always fun. And you'll have a lot of fun with us. We're quite a fun group. And we always here on a Tuesday at 11 and on a Thursday at 1400 GMT +2 for a bit of fun. And then, of course, you've got my videos during the week, which I'll put out as well, which give you loads and loads and loads and loads and loads of education. Yeah, it's going to break a level there, Shane. I think it's definitely, it's got to break this level here, okay? I know it's a line, I've drawn a straight line, not a blocky, but it's pretty much, it broke through there. That was the resistance. It came up, back retest, back retest, back retest. It's holding well. This area is holding very, very well. And there's a good chance it'll keep on holding. But the more times it knocks on the door here, the more chance it's got of breaking through. Now, I'm the first one to call this to 6,600, but I got a funny feeling that it's wanting to break through here. And if it does, it's definitely going to come all the way down to 63.80 down here. And if it breaks that level, we're talking some serious moves down. So let's see what it does. Let's see what happens. Maybe somebody's planning to say something silly in the markets. Yeah, there are a lot of nice people on this chat. There are a lot of nice people in this group. And I'm happy to say that 99% of all the people that are on this channel are decent people and nice people. There are the odd 1% that are, let me not say that, but we won't talk about those. But yeah, most of us are very cool, very happy. That's what keeps me going, by the way. The fact that we've got a nice group of people, nice team, and you know, decent people that I feel, you know, deserve that information, and we can do this together for you and make it happen. It's nice. Nice when there's nice people around. Cool, right. So I actually think I should call it a day now. Because I have been here for, I think it's longer than a couple of hours. That's why Shane's getting so many ads. It's because I've been here the whole day. So the longer I stay here, the more ads you're going to get, I think. But if you're premium, you get no ads. But yeah, I think the longer I stay here, the more ads you're going to get. So yeah, no, I'm going to be on my way now. I'm going to hit the road. And I really enjoy having you guys around. Don't forget to like, guys, hit the like, hit that like button, hit the like button big time. Give us a like button. Let's grow the channel. But like I say, time for me to hit the road. I'm typing a big thank you to everyone, and I will catch you on the rebound. So keep your feet on the ground, reach for the sky, make lots of money, and I'll see you guys on Thursday again, I presume. And we'll carry on chatting.